This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe Rabil. So what I want to do today is talk about using 3 time frames, actually 4, because we're going to go down to a real small time frame when we're looking for an entry. And what I want to talk about today is if you want to be a little bit more aggressive, I don't want to assume that you're going to take the signal that I might be interested in. You might be interested in getting in much earlier than I like to look for a little bit more confirmation these days. I don't like to jump in and jump out, but there are times when something presents itself where it's coming into a confluence on multiple time frames, and you want to use a small time frame to get yourself in. All right, so this will make a lot more sense as we get through this more. Now, if you want to learn more about some of these techniques, I would suggest starting with my book. You can go to rabilstockresearch.com/book for more information. Also, you can click the link in the description. I've got some information there. And also, if you do enjoy this content, please hit the like button and also subscribe. Okay, let's start out with the stock IDXX, IDEX Laboratories. And what I want to show, it became a little more obvious as we saw strength to the upside and the pullback on the 18-week here, which was essentially where this is breaking out of this big W pattern. I didn't draw that very well, but we did have a nice little... you can see this pattern right here. So what I want to talk about is this undercut pattern. All right. So if I take a horizontal line here and draw it sideways, we can see that we undercut this important low. All right. And then we immediately reversed, and you can see it on the weekly chart, immediately reversed up and started moving. Now, I mean, typically what I like to do is go down to the smaller time frame and look for a pullback. But when we have this much strength in the move, it's really not a bad idea to just keep your eyes open for smaller time frame action. All right, so we get this strong, powerful kind of reversal with divergence. See the MACD making a higher low, while price is making a lower low. So we know that sometimes we can make a much stronger move out of this spike pattern, this undercut pattern, and we need to be ready for that. There's a couple other things going on here. So if I draw in this downtrend line, we can see that we're actually breaking a pretty important downtrend line on this time frame as well. All right, so we know that we might jump the gun a little bit on breaking this downtrend, but we know that the potential is there with the undercut in place. All right, so what we want to do is, again, go down to a smaller time frame. So first of all, we'll look at the daily chart, and you can see I've got the crosshairs so everyone could see where we are. I've scrolled back on both the daily and the hourly. We get this big green bar reversal off the low, and then it just kind of a lot of strength to the upside as this, and then it has the pause here. All right, but if you notice with that big green bar off the low, it gets us crossing back above this, not only this low here, but we're also coming back above these bottoms right here, which I think is really important. So from a shorter term standpoint, we're showing signs of improvement. And again, we get this big green bar to show up. Now, what's happening on the hourly chart is we break the downtrend line here, okay, and then we pull back. And then we come back up through this prior high here. All right, so that's the 1, 2, 3 sequence. Now, what I would not recommend in this situation is taking the 2, okay, because we're playing a much more aggressive sequence here. We're not pulling into trend support on the higher time frames. We're kind of hoping for a reversal pattern, an undercut pattern, as opposed to where we buy on a pullback to a rising moving average at the monthly or the weekly. So in this case, I wouldn't take this 2 signal, even though it was a pretty nice looking signal. I would wait for a completion of the 3. The other thing you could do is use your moving averages. I've talked about this more and more on this channel over the last few months. You can see where prices above the moving average and both lines are rising. We have confirmed trend on the moving average side of the equation. So it's good confirmation. If you notice, when that happened, it was about almost exactly the same time we completed the 1, 2, 3 to the upside, and that was the start of a new trend. Okay, so we can get in early in these situations. If you see these undercuts take place, start to look at the smaller time frames. And I would go down to an hour. If I'm looking at it on a monthly and a weekly, all right, I would probably be going down to an hourly to look for a reversal. All right, so that's how I would be handling that. Now, let me show you another example here. We'll look at Wynn Resorts. All right, now this one is a little bit different. It had the same kind of undercut pattern with the spike low or a bottoming tail candlestick bar, right, off the bottom. But in this case, we made a move off the low and then immediately pulled back to a rising 18-week. All right, now let me make sure we're lined up on this time frame. All right, so what we've got here is first order of business is we undercut this low and then we make a move to the upside. So we know we've broken the downtrend line, and now we're coming back to test, not only test this prior low for the 2, but we're testing the 18, which again, let me move these out of the way. You can see is now cupping around and starting to rise. All right, so where that is taking place, I'm going to use the crosshairs again. On the daily chart is where this has gone through this consolidation pattern, and now we're forming this opposing trend pattern. But we have a zero line reversal, and we have low ADX here. Okay, so what I'm seeing is I've got trend support. I've got an undercut pattern. All right, now I've got this pullback that's showing no strength in the sellers and no real velocity to the decline based on the MACD and the ADX. So I'm willing to play this and say if I can go down one more time frame, I'll be a little bit more aggressive here. Now, I'm going to give you the two options again. If you notice the way this played out, we broke the downtrend line, rallied up, came down and tested here, and then this big green bar shows up. It doesn't actually make the 3, but that big green bar, if you're watching what's going on, I mean, I think that's got to be your signal here. You've got to be looking to enter on this big green bar. You could wait for the 3 if you wanted to take out that high. If you wait a bar or two, you'd be in. But if we're sitting here watching our pattern develop, right, and we know that the 3 is a little bit higher, and we get this monster green bar, I think you've got to take that as a buy signal. All right, now the second one would be where price is above both moving averages and they're rising, and that's this big green bar here. Both lines rising right here above. Let me erase all this. You can see this was declining. Now it's starting to rise. This is starting to rise. It's right in this zone somewhere in here where you're getting the signal. So it was a little bit later than the 1, 2, 3. But again, if you notice, the 1, 2, 3 didn't make any progress until we got confirmation from the moving averages. Okay, so it's just a good little confirmation tool to use when you're looking at these types of signals. All right, so if you notice the way this played out, we had a pullback to a rising moving average with a pinch play. Okay, and then we had the opposing trend pattern develop with no strength whatsoever. Okay, so we can go down one more time frame and see if we want to play the lower time frame signals. All right, so this is just a way for you to enter some of these on from an earlier standpoint and not necessarily waiting for a confirmation tool on the typical trigger time frame. Now, one thing I'll mention on both of these trades, both IDXX and the Wynn, what I would suggest is take the signal off of the hourly chart. Okay, whatever you're going to do. But then reference the average true range on the daily chart as your trailing stop and to be used for targets. Okay, so that's my suggestion. My suggestion is we're trying to get in early, but we don't want to get stopped out real quickly. And the other thing we don't want to have happen is as we start to go and move up, any kind of little pullback is going to take us out because we're using hourly risk. If we use the hourly risk, I want to use the daily risk in this situation because I'm trying to get in. You could even use the weekly if you're playing it as a longer term play. So, I mean, that's possible if you're looking at it that way. I would probably look at it as a pullback on the weekly and a trigger time frame on the daily. So I'm going to use 2 times the average true range on the daily chart in this instance. as they stop and what I'm going to use for my targets. Okay, and so even though you're triggering on the smaller time frame, we look at IDXX, the same concept. Even though you're triggering on the smaller time frame, you do want to catch a bigger move, and the way to do that is to enter using the smaller time frame, okay, which is going to improve your timing. And then use the average true range on the daily chart for your targets. Now, there's one other thing you could do, is you could use the average true range on the hourly for your initial stop, but then you have to know exactly what the targets are using the daily. Okay, and you also have to know where the stop is going to be after you hit that first target. So you can use the initial stop to keep it really small. And what's going to end up happening is you're going to use hourly stop and daily targets. Okay, hourly for your stop, hourly ATR for your stop, and daily ATR for your targets. And you're going to massively change the risk reward equation. It's going to go from like 2 to 1 or 3 to 1 up to like 7 to 1 very, very quickly. All right. Now, again, the problem with that is be careful about using that as your trailing stop. I think I would use that and see if it goes and hits the first target. If it does, switch to a daily average true range from there. Go to the break even, and then just switch to a daily from a trailer for both the targets and the stop there. So that is another way you could go about doing this to improve the risk reward on initially. Okay, initially, but not after that. I hope this all makes sense. Let me know if you have any questions. Thanks.